Hi guys. All right. I hope you're okay. Here is a quick one on the debtors collection schedule that you were talking about. I hope this is going to help you. All right. So in this particular question, they wanted us to do a debtors collection schedule. But if you look on the debtors collection schedule, there is also an amount that is missing here in the month of May. So there is credit sales for May that were not yet calculated. All right. And then if you come to the information, if you want to get the May credit sales, you you are required then to look at the amounts that were collected, the totals of your sales, and then you would also be able to get that amount. So if we're to get the May credit sales, in May we have sales of 770,000. So you have 770,000 in May, and then it says goods are sold at a markup, and then credit sales are expected to be 65% of total sales. So 65% of total sales will give you credit sales. So in other words, you just have to say 770,000 multiplied by 65%, and that is how you would get your 500,500. Then when you come to your collection now, you're going to collect 40% in the same month. Then you're going to collect 50% in the month following. Then you're going to collect 8% 2 months after sale. All right. And then this will be uncollectible. In other words, this will become your bad debt. So when you come to the month of May, what it means is 40% is in the month of sale, same month. That means May, for May, we're going to collect that one that I indicated as number 1, 40%. Then the next month we'll collect 2. Then here we collect the one that I indicated as 3. So what it means is I'll take now, when I'm to get my amount here for May, I'm now taking my 500, then I multiply it by 40%, and then we're given a 6% trade discount. That means if I say my 100 minus the 6%, I remain with 94. What I want is what remains, 94 over 100. That is how you end up now with 188, 188. So I come here, it's going to be 188, 188. That is how we end up there. Number 2, I have 409,500, and then we're collecting 50%. So it's going to be your 409,500, 409,500. My bad there. Let me just erase it. It's 409,500. It's 409,500. Then you multiply that by your 50%. All right. So it's going to give you 204,750. Then you come to number 3. Number 3, you're collecting 8% now. 8%, and this is how much are you collecting there? Number 3, you have 364,000. All right. So you're coming to say 364,000 multiplied by what percent? 8%. 364 multiplied by 8%. That is how you then get your 29,120. Remember, there is another question where they can give you already the 188,188, and you have to calculate going back now, to get the 500. So there's a case whereby you can be given this one, then you have to calculate to come back to the 500. When you're given that, you simply have to do the reverse of this going back. So in this case, you would get your 422,058. This is what this question wanted. I hope this is going to help you. The next one, then they say calculate the cash sales for April. Cash sales for April. So what we're given is total sales for April, which is 630. So cash sales for April is 630. Here they're telling us that credit sales are 35%. Remember, total sales, the 630 is equal to 100%. So if credit is 65, this is credit. Therefore, cash is what remains, which becomes 35%. That becomes your cash. So what you want here is 35 over 100, which gives you 220,500. Okay, since I still have time, let me do this one, the increase on the loan. The increase on the loan. It says here on the increase on the loan that Janet Bloom has provided a loan to the business at an interest rate of 9% per annum. Interest is not capitalized, and 1/3 of the loan is repaid to her on the 31st of December each year. 1/3 is paid to her on the 31st of December each year. As the company was still experiencing cash flow problems owing to the coronavirus lockdown, Janet agreed to increase her loan to the business. All right, so there's an increase on the loan there. That is what we want to calculate. All right, so let's see if we are given more information. All right, so we are given interest on the loan. You can see here in the month of March, the interest on the loan was 1,365 in the month of March. Okay, but when we get to the month of April, the loan is now 2,625. In other words, there is an increase on the loan. The moment your interest increases from March to April, your interest is increasing. An increase in the interest on the loan, when the interest rate of 9% is constant, it simply means the loan has increased. So I'm going to show you a short method of doing this, whereby you take your new interest, which is 2,625. Then you subtract the interest before the increase, which is 1,365. All right, and then when you do that, you get a difference which is 1,260. If you want, then you can then say the loan that we have received is X. Multiply that by the interest rate of 9%. Multiply that by 1/12. It is equal to 1,260. If you are to solve this quickly, then you can simply now say 1,260 multiplied by 100/9 multiplied by 12. Are you still with me? All right, then it will give you now your 168,000. So the increase on the loan becomes 168,000. The simplest way is for you to say 1,260 multiplied by 100/9 multiplied by 12. But remember, your equation would have begun in this way there. All right. And then remember, watch out, what if the loan has decreased? What if they want you to calculate the repayment on the loan? What if they say now calculate the repayment on the loan? That means you simply have to do the reverse again. So it will almost be the same way, whereby your loan was more, now it has decreased. Then you can simply get the difference. When you get the difference, now come and solve as we have done here. All right, I think I won't have enough time to squeeze in another one. Okay, I'm gonna send this one as it is. I know you guys are practicing. Please keep pushing, keep pushing. We're almost there. We're almost there. We can do this. We can do this.